If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome everyone to the channel. I'm Louis Crypto. Make sure you're following me over on Twitter. This is where I post either before or after my YouTube updates, and we're only just under 40 followers away from 2.5k, so use the links down below to follow me over here. I've already made some updates today, so go check them out. A very important one on Quant. I can't find it now. Here we are. Found the update on Quant. We called pretty much this bearish signal perfectly in yesterday's video. This is where, before this actual candle, there was a bullish pattern forming. We were calling for a double bottom. Now, with double bottoms, understand with patterns in general, you need to break the neckline. That was up here at around $127, $128. We unfortunately didn't even manage to push through the $121 level of resistance, which was part of our golden pocket over here, and 20 moving average. So if we want to continue bullish, if we want to have this potential double bottom, not only do we need to reclaim the moving averages to make this an uptrend. Look over here, when we are above this purple line, we're going up. We're currently under it means we're going down. So if we want to go up, we need to take out this resistance. Also, to validate the double bottom, to retrace back up to this high $150, you need to break through 127. So we had the opportunity to do so because we actually formed some bullish candlestick patterns on the lowest point of our uptrend, which is the 200 EMA. And previously, when we had a similar candle, we did get the move back up. Now, on this occasion, we had a chance of forming something called an EMA repel, which is stopping a potential bearish cross, which is unfortunately what we're getting right now. But over here, can you see in the past, you lost the 20. There was a chance of losing these lower moving averages, but before they could cross over, it did not cross over, and with that, look what the chart did. Skyrocketed. So this was about to cross over here. We stopped it by pushing price above the moving averages. And remember, when we're above, we continue higher. So it's trying to basically get above and continue higher. But what you must then do is confirm it as support. And when we started to come down, you can see it was eventually lost. The specific lines were lost. The moving averages were lost. Supports weren't lost. Our lowest wick here was not lost. Now it has been. And that's all because even though we had a bullish signal, a potential double bottom, and this candle looking very similar to this, which brought a nice move up last time, it actually, in fact, did bring a move up. It's just during that same day, the bears stepped in. And that's what has basically reversed this potential bullish pattern into bearish continuation. Now that we have lost the 200 EMA and this wick low, we've now changed this daily uptrend into a daily downtrend. So expect over the coming days to go down. We may get some bounces, but those bounces must reclaim the 200 EMA and the 20 EMA, and that's how we get that bullish continuation to break 150 to go to the all-time high $430. Without the reclaim of this level or 120, we're no longer on the path at the moment to the all-time high. That means we're just deviating from it. Doesn't mean that we can't go there or that we're not eventually going to go there. We are eventually. We're just stalling off that process so we can view this as opportunity. In today's update, we're going to run through all of the supports that you need to know. Well, they're already listed right there if you've been noticing, but yeah, we'll run through that in more detail today. So make sure you like, subscribe, comment and share. We're so close to 8k, and remember, under 40 followers from 2.5k over here. This is where I made a video first noting about this bearish shooting star. It was a daily candle close, so you need to look at the closes of each day, not what's going on when you wake up and you just see some massive green candle, for example, because that's what would have happened here. It was a massive green candle because we had the bullish signal from earlier on, and then from a few days before. This opened as a huge green candle during the day, which had actually reclaimed the 20. So you'd assume it's coming up to about the 127 mark to take that out and go to 150. But you can see before that daily candle close, we rejected it, and for the close, we can see it confirmed as a rejection, a shooting star candlestick pattern, and we can see right now what is going on. Now, I was asked, what are the targets? As you saw, if you had noticed, When I was talking, I didn't even notice, but yeah, I did actually mention it earlier today. Someone asked, Moonshot here, little shout out to you. You just watch every single support underneath this point now, so that becomes 100, which is a psychological level, then 97, 94, 95, and so yeah, we'll run through that right now. So what I did, I think I went from here to here. The reason why I said I think is because I've changed it now. No, it wasn't this one. Where did I go from? Oh no, yeah, I remember now. When you use like multiple fibs, you start forgetting. Here we go. So yeah, $100. You didn't need the fib to tell you that. It's a psychological level. Then 97. And then we can see over here, using a separate fibs, it's about 93.7. I've just called it 94 to 95. So these are our supports. While we are above this, we're still expecting a bounce. And I remember, as I said earlier in the video, this bounce must reclaim the 200 EMA and the 20 moving average. Without doing so, we will eventually just keep rolling over. So even if we get this bounce from here, which I am anticipating, guys, we are meant to use this as support for bullish continuation. So of course, even though it's meant to do so, you have to question why there are numbers underneath that point. So it's just preparing if it goes wrong pretty much. So although we're meant to go higher, meant to continue to the all-time high from this point of support, you need to take out the resistances. Now that is here at $110 and $117. Now those are your two levels, the $7 level of resistance, or $7 area of resistance that needs to be flipped back into support in order to continue higher. If we just run into the area, whether it's the lower end or the higher end, but we're failing to actually flip it into support, we will continue with this level of 100 being lost now, and then down to 97, 95, 94. Now this is a very key level of support, guys, because this was our first higher low. Look at what we've been doing the whole way down. Low, lower low, lower low. This is our very first higher low. If we're losing that, we're losing bullish structure. At all costs, this low needs to hold. Yes, that if we do lose it, yes, there's still a chance we could reclaim it, but really and truly we want to hold this level. Why? Because it's the golden pocket. Yes, technically speaking, you can come down to $87, but again, when we get down there, there's now higher probability chances of using this area as resistance to continue lower. Yes, correct, there's still a chance of reclaiming it, but it's more of a chance now. Here, you're meant to hold this as support to get a bounce that continues higher than this high, whether it's from the 0.5 or the 6. This is what should happen. Of course, that can go wrong. This is the path where it does go wrong if we are not reclaiming and flipping 117 into support. So that's 110 to 117. And then, of course, from that point, we would just continue lower. So we need to watch over the next few days. If we reject this 110 to $117 location for continuation to the next level of support, 93 to 95. And then from there, again, we need to start that slow process of reclaiming all those levels, start this move to the all-time high. But you can, of course, see, even just getting a move down into this area, there could be bearish patterns forming on the chart. Now in bull markets, bearish patterns are the tricks, are the scams making you sell, and then we go up. So yeah, they are the traps. So we need to be careful with that, but equally don't ignore them as well. We know that losing this key level of support, which is the support that we've been mentioning today, 94 to 95, you'd validate that bearish pattern. So we'd be looking at targets below where we have previously bottomed out, looking at new lows that we haven't seen just yet. But we're not looking at that at the moment. We haven't validated that path. There is potential of it happening. That's why I had to mention it to you guys yesterday. That's if today. That's if we lose this level. But I'm really happy that I had the skills to notice, to recognize, even though we were bullish over here, calling for this double bottom while this was support, very quick to flip bias when proved otherwise. Always the first to let you guys know, telling you the truth. So if you want to learn that for yourself, then consider joining the community or even taking action on the ebook. These are our cheapest options. I'm actually doing a discount on at the moment on my course and mentorship plan. Now, the mentorship plan will include my course as well as 3, 5 or 10 hours of my one-to-one help and 2 months free in my Discord community, where you'll gain further group mentorship on top of my personal portfolio that has many cryptos on. So use the links down below if you want to take action on these discounts or just join the Discord community. I'll catch you guys in the next one. Like, subscribe, comment and share. Let's hit 8k and 2.5k on Twitter. Cheers.